Good morning, investors and traders. This is Muslim live on our YouTube channel. As always, this is your opportunity, folks, during which you can ask me as many questions as you can. And if you haven't subscribed to our channel, please make sure to do subscribe us, because this will help you to get all notification the moment that we go live. And of course, when we put out the new technical analysis videos, which we do on a daily basis. Now, in terms of our markets, what we're really seeing is that we're seeing the equity markets moving to the downside because of one particular reason, and that is the Federal Reserve meeting is taking place today. At 7 p.m. tonight, London time, we will hear from the Federal Reserve in terms of their monetary policy. Now, of course, the expectations are that the Fed will keep their monetary policy unchanged, meaning there will be no change in the interest rate and there'll be no change in the asset purchase program as well. This is despite the fact that we have seen the month of December, during which unemployment rate obviously surged, and more importantly, consumer spending has been coming weak for the last 3 consecutive months. But of course, let's see what the Federal Reserve will say in relation to these particular numbers. Will they acknowledge these numbers, or will they pay more attention to more optimistic view? And that is, yes, coronavirus vaccine is here, and yes, several different US states have started to loosen the coronavirus restriction. And that means economic growth returning to normality, or less obstacles in the path of economic growth. So, of course, if that is the focus, then we are not going to hear from the Federal Reserve very much of a dovish tone. However, if the Fed do pay attention that, look, okay, consumer spending is enormously weak and unemployment rate has started, or unemployment situation has started to deteriorate, then we can see a very different outcome. So let's say if the Fed stands a bit more dovish, there is a possibility that the equity market, the traders in that, they start to think that the Fed is going to start tightening up the monetary policy sooner than later. And that will really bring enormous amount of volatility and perhaps a leg lower in the equity market. On the contrary side, if we see the Federal Reserve still showing a lot of concern about the stock market, about the economic recovery, and of course about the consumer spending, then that means that this monetary policy is likely to remain here for a much longer time. One important thing that investors are also keeping in mind is that the massive stimulus package that was very much drummed by Joe Biden is going to be somewhat is going to meet some disappointment, because now we know that particular package is not going to be passed until the current package runs out, and that will be towards the end of March. So we have another, literally, let's say 2 months of this particular conversation back and forth, and on which the market is very much going to continue, or which the market is really going to react. So keep an eye on these particular developments. In terms of our Bitcoin prices, we are still holding on that 30,000 crucial price level, and as long as that remains the case, the hope is that we will still see another move to the upside. That's all for now, and I'll see you guys next time. Thank you.